Close your eyes for a second. Imagine waking up on a Tuesday morning, checking your phone, and seeing an extra $250 sitting in your account. You didn't trade your time for it. You didn't deal with a boss for it. You didn't even have to get out of bed. That money is yours, 100% passive. Now ask yourself, what could an extra $250 a month actually do for you? For most people, $250 is a bridge. It's not quit your job money yet, but it's life-changing money. In 2026, $250 covers the average American's monthly electricity and internet bills combined. It pays for a high-end car insurance policy. Or, if you save it, that's $3,000 a year, enough for a fully paid, week-long tropical vacation every single year, forever. This isn't just numbers on a screen, it's a tangible upgrade to your daily life. When people hear living off dividends, they picture top-floor managers or big-time Wall Street investors with millions in the bank. They think it's a zero-sum game where you grind for 40 years and only enjoy the fruit when you're too old to climb the stairs. Bob is here to tell you that's wrong. Investing isn't a locked vault, it's a ladder. You could start enjoying the fruits of your labor now, at the $250 level, long before you reach the finish line. But there's a reason most people never hit that $250 mark. They make the high-yield mistake. They see a stock paying 12% and think it's a shortcut. It's a trap. You have to look at the payout ratio. If a company earns $1 but pays out 95 cents in dividends, they have zero room for error. If their business hits one bump, they have to cut the dividend. When that happens, the stock price usually crashes too. You lose your income and your original investment. Bob looks for the sweet spot, companies that keep enough cash to grow while still paying you. So, how much do you actually need to invest to hit that $250 monthly target? Let's break it down into 3 risk categories. To reach this goal in 5 years, here is the math. First, the conservative path. This assumes a lower yield of around 3%. This is the safest set-it-and-forget-it strategy. To hit your goal here, you would need a total portfolio of $100,000. To reach that in 5 years, you would need to invest roughly $1,450 every month. It takes more capital, but your principal is protected. Next, the moderate path. This assumes a 5% yield. To reach $250 a month here, you need a total portfolio of $60,000. This requires an investment of about $850 a month for 5 years. Finally, the aggressive path. This targets a high yield of 7 to 8%. You are looking at higher-yielding sectors like real estate investment trusts. To hit your goal here, you only need a total portfolio of $37,500. That means investing just $530 a month for 5 years. It takes less money up front, but you have to watch those payout ratios like a hawk. The future is not as distant as you think. Whether you choose the safe path or the aggressive one, the goal is the same: freedom. Every share you buy is a tiny employee working for you 24/7. Stop waiting for retirement to start living. Start building your $250 bridge today. Subscribe to join Bob on the roadmap, and let's get those bills paid by someone else's profits.